You see a lot of negative figures there. This is a strong positive 7.6%. So that's what we expect to see out of this portfolio, and it's doing exactly that. Now, there were a couple of questions from last month's meeting where we showed the quarterly report, the longer document, and there were some performance disparities between this page and then the fund sheets that we showed later on. Track that down. What has happened is primarily is the double line bond fund was the one where it was most apparent. So the returns that we were showing on this page were the accounting returns, so the ones taken from the bank statement, Bank of New York. And what happened was that the interest payments were coming in on the fund and were being credited at a date on the other side of the valuation. So the mutual fund returns that were shown in the post pages were being credited immediately. As that interest payment came in, there was a short delay, but it happened to be over a valuation date. Same return effectively over long periods of time.
The quarterly report, correct?
So I think that if you're, this is accounting, right? It was accrued but not applied. So what was showing in the fund sheets was actually accrued. What was showing in the this page of the quarterly report was not accrued, right? Okay. Because it was showing up on the other side. Hopefully, with our new custodian, this won't be an issue going forward, and that's going to be July 1.
I would expect that, wouldn't you, Bob? Okay.
Hopefully. That's what we're hoping.
Great.
Now, one more item to add before, well, two more, actually, is that there is another cash flow coming in, and it will be investable as the new custodian comes online, July 1, and it's going to be about $1.2 million, and it will be invested to our long-term target. And the eternal question of Dreyfus appreciation, what is the right benchmark? We've gone through this. We really can't find anything that's closer correlation. And we just have to remember, okay, what is the job of this fund? Very large cap, very safe companies. Reduce some of the overall risk because these are large established companies with fairly reliable revenue and profit streams. And its job is to provide large cap exposure that's a little bit less risky than the index fund and much less risky than the other equity portfolios, such as the Vanguard Midcap, Hotchkiss, and Stevens. Now, looking forward for the rest of this month, there's several issues in the news. The economy is not growing as quickly as some people. It's the eternal story there that we've had since 2009. The economy is not growing as quickly as we want it to. What is the Fed going to do? Are they going to raise interest rates? And a huge issue on the international markets is, I believe it's June 23rd, coming up very quickly, where Great Britain is going to vote whether to stay in or to leave the European Union. They're not a full member. They're not a member of the currency union because they still have their own currency. But actually leaving could have a fairly large short-term impact on securities prices.
So what's your projection on the number and timing of rate increases?
Oh, I don't think that there's, I mean, terrible at this. I don't think that really the Federal Reserve, especially after the employment figures that came out last week, tremendously disappointing. Not only for this month, but they revised last month lower. I don't think that they can increase them this year. I think it's, it was going to be 4 at the beginning of this year, or for the course of the year. They raised in December of last year. Then it was going to be 1 in June. I don't think it's going to happen. Then it was going to be 1 in September and 1 in December. But personal incomes are not rising. Economic growth is slow. They're hesitant to do it in a presidential election year to begin with. But right now, it seems like it has turned. The psychology of the markets has turned. And if they don't raise, it means the economy is weaker than we expect it to be. So 1 at the most this year. But I've been saying that since 2010.
Right, right.
2010. So, I mean, the good news is that the United States is the strongest of the economies, and that's where we have most of our investments here. Bad news is that we're the strongest economy at a 2.5%, 2% growth rate. So, staying strong, staying long-term focused, and making sure we're diversified, which we are. And that's all I have to report for today.
Any questions? Thank you, Doug.
Thank you, Chairman and trustees.
All right, take a motion to receive the monthly investment performance report.
Second.
All in favor? You can now put Laura in the mix of the motions. No, we're good. Next item number 4, we don't have any issues on there today. Item 5 is to approve the fiscal year 17 annual budget for the Opebt Trust, and Chris York with the Office of Management and Budget is here to present the budget to us.
Good morning. I'll just take you through what I think are the highlights, and then if you have any questions, please stop me and I'll try to resolve those for you. So starting off with our revenues, our indemnity retiree contribution, we can see that it shrank by about 8% or $800,000 down to $8.3 million. There's a few things happening there. The first of which is good news. We had a little bit of a miss. We had projected about a 10% increase in our premium equivalent rate that drives that indemnity cost for us, when in fact the contract rate the premium equivalent rate that we received back was significantly lower than that. And so you're seeing the decrease there to reflect us catching up with that new projection. In addition to that, it's offset by a 2% increase in the retiree contribution that was planned for this year. It's up to 46%, moving towards that eventual goal of 50%. Almost the exact opposite story in the HMO retiree contribution. We shot just a little bit low in our estimate from prior year. That contract rate came back in just a little bit higher, and then on top of that, we're projecting about a 6.5% medical inflation increase. So that brings us to that increase of about 9% that you're seeing there. The dental retiree contribution remains relatively flat. That's driven mostly by participation by our members there, but also there was a slight decrease in the contract rate of about $1 to $2 per month per member that we received back for this current year. The life retiree contribution, similar story, driven mostly by participation of our members, but there was a slight increase. I think it worked out to be about 50 cents per year per member, but that accounts for some of that movement there. Vision retiree contribution is new for this year. It's a new offering for our retirees that wasn't budgeted for prior because we didn't offer it. And so this will be the first year that we account for that. Interest and dividend income, unfortunately, it tends to be the forecast roller coaster a little bit for us. You can see that back in FY15 we received actual $3.1 million, and our budget was much lower for FY16 at $1.6 million. But based on what we're seeing in this current fiscal year, we've bumped that number back up to $2.7 million for the FY17 budget. And that's based solely on what we've received year to date and then projecting that out for the remainder of the year and saying that's what we're going to receive in 17 as well. Refunds and reimbursements, similar story, although not as volatile. You're seeing about a 10% increase there, about $148,000, based once again on just what we've received year to date. The retiree subsidy from the general fund is the last piece there. It decreases $2 million in the current fiscal year, in the forecasted fiscal year. But I do have to point out that that still remains about $2.3 million above the pay-as-you-go amount. And as we'll get to lower in the document here, we're still contributing about $6.7 million to fund balance to address that long-term liability there. Under our expenditures, for life insurance, it moves in lockstep with the revenue above. Indemnity premium, once again, we're seeing a much better premium equivalent rate than we had expected, so there's about a 12% decrease there of $2.6 million from prior year. HMO premium moves just like the revenues did above, with about a 4% increase or $250,000. Dental moves in lockstep. Vision was new for this year once again. Professional services and other charges, this is where we pay for things like our actuarial studies, our postage, color copies and things of that nature. Just based on year-to-date expenditures, we're expecting about a 5% bump in that, about $1,300. And then finally, that was that number I spoke to earlier, that $6.7 million. This is where we basically are sweeping up all additional revenue and contributing it to fund balance. Fund balance below, we expect to start the year with about $53.3 million, contributing the $6.7 million above that I've spoken to, and ending the year with about $60.1 million. And with that, if you have any specific questions, I'm happy to answer them for you.
Are there any questions?
One question.
Yes, ma'am.
And it just pertains to the transfer from the OCMFA under revenues.
Yes, ma'am.
What exactly is that?
I'm not sure. It must have had something we had done in prior years but haven't done over the last few years.
The only one I can remember, Colin, is when we first started the fund, that we moved money into there to initiate the fund.
We also moved the Opebt monies from the rebates for the retiree codes.
Okay, that's what we used to do before we started the plan that we're on now.
This is just a question. Is it necessary for us to continue to show that since
No.
for the last?
No, ma'am, I don't.
No, we can drop that off.
Thank you.
All right, are there any questions? I would accept the motion to approve the fiscal year 17 OPEB trust budget. All in favor? Any opposed? Great. Thank you, Chris. The next item is resolution authorizing the general manager to negotiate an agreement with Nyhart for actuarial services for the OPEB trust. Went through an RFP process. In that process, made the selection, and this is given authorization to go out and negotiate. They'll then negotiate the deal and bring the contract back to us once it's completed. But the pricing is very comparable to what we've had over the past few years. When Nyhart is who we've had in the last 4 or 5 years. Does that sound right? All in favor? Any opposed? All right, next item is the amendment and joinder to Medicare Part D, and I think this is just a technicality to make sure we have both Medco, Containment Life, and Express Scripts listed so that as we get invoicing, that it doesn't create any issues with us. We've got them in there correctly, so it gives us both of those. One of them is an affiliate of the other, right?
Medco's an affiliate of Express Scripts.
Okay.
Express Scripts owns Medco.
So we had Medco in there, but we have, because sometimes we'll get the invoice, it'll be from Express Scripts, is that right? Okay. All in favor? Any opposed? Next item is to ratify claims listings. I thought I was going to die for a lack of a second. It's like, really? All in favor? Any opposed? Any reports or comments from trustees or staff? All right. We are adjourned.